Hi, I'm Lynda Hafner, top producing realtor at ERAQ Realty in Central Massachusetts. Today, we are going to talk about credit scores, especially for first-time home buyers who may not understand quite as much about credit scores. We're going to talk today about how your credit score affects your ability to buy a house. I hope you've had a chance to catch some of my other videos where I talk about a lot of the buying and selling processes. I break it down in easy to understand ways so that buyers and sellers just have a little background knowledge, and it'll help you make the best decision for yourself when you're buying and selling, especially in Central Mass, because that's where I'm located. Why does credit score matter so much? Well, look at it from your creditor's point of view. You want to buy a home that can range anywhere from $200,000 all the way up to $500,000-$600,000. Obviously, first-time home buyers usually don't go up that high, but that's what I'm saying. It's a significant amount of money, okay? And the lender wants to have the confidence that you have the ability to pay that back. And the only way they know that is based on your credit score. Your credit score is kind of like a report card to the lender. Instead of A's, B's, and C's, it goes by numbers. And we're gonna go over a chart that talks about those numbers.
So we're going to take a look at this chart that goes over the different types of credit ratings and what they mean. 300 to 499 is considered a very poor score, and you will most likely not be able to get much credit and definitely not a house. 500 to 600 range is considered poor, but an FHA, which is a Federal Housing Administration, will give loans to someone with 580 and above, and even sometimes 540 and above. So even with poor credit, it is still possible to get a home. 601 to 660, that's considered fair credit rating. And you're going to end up getting a lower interest rate if you can at least get up into that range. And if you're 620 and above, you would also qualify for a conventional loan, which gives you a little bit more of an advantage over an FHA loan. And then you're at 661 to 780 is considered very good. Again, you're going to get an even lower interest rate. You're a less of a risk for the bank to lend you money. And 781 to 850 is outstanding credit. It is absolutely excellent. You're a very low risk, so they're going to give you an even better interest rate, best possible terms.
Let's take a look at the things that most positively affect your credit rating. Most importantly is to always make sure that you pay your bills on time, especially your credit cards, your car payments, your any kind of student loan. All of that really needs to be paid on time. Any kind of deferment or anything like that is going to could potentially negatively affect your credit. The lender is going to look at all that. They're looking at your track record. They want to see if you show that you have the ability to pay these bills off and do it so that they're not left with your home mortgage and you without a home. Sometimes what I find with first-time home buyers is that they actually haven't had an opportunity to build their credit. And that is why it's also kind of important to maybe just try to get maybe some store credit cards or some kind of a credit card that you can have in your name. And if you don't have the ability to get one in your name, I would suggest adding yourself onto your parents or someone else who has a good credit score and has the ability to pay it off every month. I can tell you that right now I have a 17-year-old son who I've added onto my credit card so that as I pay it off every month and show a good credit rating, it will help increase his credit score. I'm doing that because I know how important it is to develop credit. And this is the only way at 17 he has the ability to build credit right now because he doesn't have a car loan, he doesn't have a mortgage, he doesn't have anything like that. And you know, first-time home buyers sometimes struggle with the ability to even show a credit score. So that would be something I would definitely suggest if that is an issue for you. But if you do have student loans, car loans, make sure you pay them on time. But also, it's really important not to have too much debt. That affects your credit score too. Like too much credit card debt is going to negatively affect your credit score. Too high of a balance on your credit is going to affect it. Too many student loans is going to negatively affect it. These are all things that go in together into the process of developing your credit score. So if you want to buy a home, these are all things that you want to address. Try to reduce your credit card debt. Try to, pay off a car loan or get a less expensive car for the time being until you actually purchase a home. Once you purchase a home, buy the car you want, but don't buy the best of the best cars before you buy a home, because that car payment is going to negatively affect your ability to buy a home. These are all suggestions I'm giving you based on, what I know. What I would highly suggest though is every situation is completely different. Everyone's financial picture is different. I would highly encourage you, if you are interested in buying a home and you're a first-time home buyer and you really aren't quite sure what you should be doing, please reach out to a lender and ask them specifically based on your individual profile what is the best way for you to go about either increasing your credit or getting yourself into a good place where you are able to buy your first home. Because buying a home is a special, unique, beautiful thing. I want to help first-time home buyers get there, and there's just a couple things you have to do to prepare before you get there. Besides saving the down payment, you do need to really take a good look at your credit and make sure your credit is in good standing. There are lots of opportunities for you to evaluate your credit online. I would suggest doing that. Check out what your credit is, but also get some professional advice. Don't rely on what you see online only, because there are so many different things out there. It's really hard to tell. One thing I do want to mention, since COVID happened, lenders have gotten a little stricter with their guidelines. For example, FHA says, 580 or above, and we will give you a loan at 3.5% down payment. But the lenders don't always go along with that philosophy. They are a little more concerned with credit score since COVID happened. And, rightfully so. Things are a lot more uncertain. They're more picky about who they're going to give a loan to and who they're going to give a lower interest rate to. So if you want the lowest interest rate possible, and ideally it comes from having the highest credit score available. So that's what you want to work towards. So even if you're not ready to buy a house right now, at least maybe you can start getting yourself ready by doing some of these things to improve your credit score at the same time that you're saving money. Because ideally, being a first-time home buyer is such a privilege. Owning your own home is a dream. You're gonna love it, and I would love to help you to get there. If you have any questions for me, please feel free to reach out to me, 508-942-7923. Have a great day.